battling the relentlessly negative doom and gloom news media. It's the Nick Stenger Show, coming to you live from the Stenger Family Office headquarters. It's your host, Nick Stenger.
All right, ladies and gentlemen, welcome back to another installment of the Nick Stenger Show. My name is Nick Stenger. We are the Stenger Family Office. For the past 44 years, the Stenger family has made it our mission to deliver both clarity and confidence to help secure your financial future. Here we go, episode 206. Hard to believe. Don't worry, be happy. What are we going to talk about today? We'll get into it in just one second. But before we do, don't forget to like the show, share it with your friends and family. And if you've been watching the show every week and you still haven't subscribed, why haven't you? Hit the subscribe button. It helps us get the clarity and confidence to more people. We so appreciate it if you can hit the subscribe button. And as we build the show, it also helps us get better and better guests on the show. And I do want to make one big announcement, which I promised you was coming. We already have the dates for next year's Investor Day, so get it on the calendar now. You have no excuse. We're a year out. October 9th, 2026. That's going to be the next Investor Day. Did I get that date right? Got the date right. October 9th, 2026. And our special guest this year, well, next year, is going to be the legendary Tom Lee. And Tom is wonderful. He's excellent. He's on CNBC all the time. He's got his own firm called Fundstrat. He was very, very high up at JP Morgan before launching his own firm years ago and has been basically spot on all these years. So we will send out a pre-registration, save the date, and a preliminary registration to clients only, and then we will open it up to everybody else. But if you are a client and you are out of state, you're in state, you've been thinking about coming up to the Chicago suburbs to join us for Investor Day, don't forget to get it on the calendar, October 9th, 2026, and we will follow up with more details. The date is subject to change, so don't book your travel quite yet, but we are going to start filling up registration for that as a pre-registration. Tom Lee headlining next year Investor Day. Now, let's jump into this week's content and the show this week, and I called it Don't Worry, Be Happy. Why? Because everybody is worrying with the market at basically record all-time highs. Now, you have to remember, we went into 2025 saying that the S&P would hit 6,700 points, and that seemed pretty good at the time, and then all of a sudden we had Liberation Day and the tariffs hit. Market went down 20%. By, I believe it was April 7th, the bottom of the market this year, intra-year correction of 20%, if you can believe it. And everybody panicked. All the Wall Street pundits, all the pessimists, all the doom and gloomers said the world was coming to an end. In fact, they cut their forecasts. We did not do that at Stenger Family Office. What did we do? We said, stay on your plan. Buy, 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 buy. Don't panic. And don't get bearish, and we maintained our price target. In fact, it was very tempting. Everybody was cutting. Everybody was saying the world was coming to an end. We said 6,700. Now, today, we are at 6,770 still after running up to 6,900. And I just can't believe the fact that people are sending me screenshots of this chart. Katie, if you don't mind throwing it up for us, showing me that the market's down. Like, oh, Nick, how could you say that the market was going to keep going up? And here we are in a pullback. Market's down, like 1.6, 1.7% today. And I go, are you serious? You're telling me that you're panicking with the S&P basically at record all-time highs, basically at our price target, 70 points over our price target. So this is a one-day chart on the S&P 500. Don't lose sight of the actual data of the market, because we like to say at Stenger Family Office, when in doubt, zoom out. This is a one-day chart. So if you look at a one-day chart of the S&P, of course, it looks bad. But here's the second chart I'll show you. You zoom out just a touch, and this is the 1 month chart. And now look at it. Now you're going to show me the same chart and say the world's coming to an end. Well, let's zoom out again. Let's go 6 months. Here's the 6 month chart on the S&P. Yes, the S&P was sub 6,000 points just 6 months ago. And if you show me this chart, you're still going to make that same argument that the sky is falling? Really? It's absolutely ridiculous. So before you take the bait, before you start buying into this nonsense that the world's coming to an end and the whole market's in a bubble, just zoom out. Look at the actual data. And what I think is really interesting is I just go back and I think about the doom and gloom narrative the past couple years. So let me put the doom and gloom narrative up here on the screen for you. You may or may not remember this, but at one point the narrative was that we were going to get nuked off the face of the earth by North Korea. And I literally had a client, I think this was sometime in 2017, 2018, somewhere in there. I had a client who called in and said, Nick, I'm so worried. It's just awful. I don't know what to do. And I go, what's wrong? And he goes, I think we're going to get nuked off the face of the earth by North Korea. And I'm like, okay, slow down. Because if we get nuked by North Korea, your investment portfolio is going to be the least of your concerns. Let's just put this into context a little bit here. So, no, North Korea did not nuke us off the face of the earth. Number two, I'm moving to Canada if fill in the blank wins. We've heard this on both sides of the aisle. We've heard this when President Biden won. We heard it when President Trump won again. And it's either side of the country. Half the country loves the guy in the Oval Office. Half hates him. And then depending on the president, somebody inevitably is going to say, oh, we're moving to Canada. We're moving to Scotland. We're getting out of here. Really? You're really going to move to Canada? No, you didn't move to Canada. You're still here. Then it was Brexit was going to ruin the economy. This was 2016. Brexit's going to take us out. Grexit's going to take us out. And it's going to be all over for the global economy. Nope. Global economy's at record all-time highs. Then it was COVID. We're going to have a new normal. Remember the phrase, a new normal, after COVID? And nobody would ever go back to real life again. We were never going to travel. We were never going to go to a concert, never go to a comedy show. Yeah, right. I was just flying. It's packed. Planes have never been this packed. TSA checkpoint data has never been this full. We are back, and it's not the new normal, because if it is a new normal, it feels a lot like the old normal to me. Restaurants are packed. We just tried to book the restaurant for Investor Day, and we had like 5 options, and it's a year away. And we're supposed to believe we're in a new normal. That turned out to be wrong. Next one, higher rates were going to cause the stock market to plummet. Now, in the short run, yes, the market went down, repricing some stock prices, but here we are at record all-time highs again, even after 2022 as the Fed started their hiking cycle. Then it was tariffs. This year are going to be the end of the world. Now, the thing I don't understand about the people who panicked over tariffs is that President Trump literally campaigned. His entire campaign was about tariffs. We are going to make China pay for what they've done to us with COVID. That was basically his entire campaign. And he did it the first time around. This wasn't even like a campaign promise with an empty promise and no results. You knew what he did the first time. He put tariffs in on China the first time. And then as soon as he actually did what he said he was going to do, everybody panicked. Like, what are you surprised by? He said he was going to put tariffs in. If you were going to panic, you should have panicked in November when he got elected. It just makes no sense to me that people would panic over these tariffs. And it turns out that it's actually working. We'll see how it goes. I'm not the biggest fan of tariffs. I'm not going to say that I advocate for the Smoot-Hawley Trade Act. I'm not saying I advocate for all these tariffs on everybody everywhere. I think that was a little brash. But absolutely, China has been held to the fire. Their feet have been held to the fire the past couple of years. Mainland China manufacturing has been gutted by the fact that we are actually dealing with trade for the first time ever. And by the way, if tariffs are so bad, then how come every other country on earth has them on us? And again, I'm not advocating for every single thing that President Trump has done. I'm not saying every tariff on every country is a good idea. But you have to ask the question, why would people panic over this? Next, the government shutdown. This is the one we're in right now. The government shutdown would take us out. And it turns out the government reopened and the stock market went down. Absolutely incredible, the doom and gloom we've been through. There's this idea, and I get this sense from people when I talk to them, that everything right now is just horrible. Oh, the world is terrible. It's never been this bad. Really? Let's look at the data. People are living longer than ever before. Cancer mortality is at record lows. Global poverty. We've never alleviated this much poverty ever in the history of the world. Real GDP is at a record high. Stock market's at a record high. Millennial net worth is 4 times higher today than it was in 2019. Baby boomers are the richest generation ever in U.S. history. Oh, yeah, everything's terrible. Everything's awful. Really? The people who feel that way, I genuinely think they have this addiction to panic. I really think that's what it is. I think they're addicted to fear, and I think they're always looking for something to scare themselves. And there is something to that. I think psychologically, some people, they just want to be scared. They always want to have something to worry about, something negative to talk about. People fall in love with pain and suffering. They just do. And you got to be careful with that before you apply it to your portfolio, because in the end, companies are run by people. I had this conversation with a client today, actually, and we were talking about all the things that people are worried about, all the doom and gloom stories that we just covered on the previous slide, everything that we're thinking about. Management teams are thinking about too. CEOs are thinking about, CFOs, COOs, chief operating officers. They're all thinking about the same stuff we are. So if we're thinking about it as investors and the companies are thinking about it, well, what are they doing every day when they go into the office? They're working the problem. They're coming up with solutions. So, by the way, if you are sitting here in Naperville, Illinois, or Spring, Texas, or Baton Rouge, wherever you are, anywhere across the country, and you know all of the 10 reasons that the world should be a scary place right now, you don't think that everybody else knows them too? You don't think that everybody on Wall Street knows? You don't think all the traders, all the hedge funds, all the management teams, you don't think they know the same things that you know? They do, and they're already ahead of it. They're working the problem. That's why trying to time the market and trying to get ahead of the panic and the doom and gloom just doesn't work. You cannot time out doom and gloom successfully. Now, who knows what happens next year? There could be 10 more reasons to panic. In fact, I would say that's the only certainty we have next year, is that there will be 10 doom and gloom stories to react to. But in the end, companies are going to do what they've always done. Management teams are going to get up. They're going to go to work, roll their sleeves up. They're going to work the problem. This is how the economy works. Now, another thing I want to mention is that the economy and the stock market are not completely connected. This is a huge misunderstanding that people have. People think that the economy and the stock market are the same thing. They are not. The economy is measured by GDP. A lot of people actually think GDP is not even a very good metric anymore because we're in such a global economy. A lot of these companies get so much revenue overseas that it really has less to do about U.S. GDP, and it has more to do with actual output from companies. And I tend to agree with that, but we do track GDP. GDP is a good measure of economic activity and wealth creation and all the rest of it. But at the same time, it's disconnected in a lot of cases from the stock market. You ask yourself, how could it be that it feels so bad sometimes? How could it be that we had tariffs, we had Liberation Day, stock market went down 20%, and now it's back up? Well, remember another time this happened. This was during COVID in the spring of 2020, during March, and the stock market dropped in 2 weeks 35%. One of the fastest drops we've ever had on record. We finished that year in 2020 up on the stock market. And you might have asked the same question. You might have said, why is it that the stock market's back up at record all-time highs at the time, despite all the doom and gloom, despite all the reasons to panic? The world was shut down. We shut down the global economy. So all the people this time around who came back and were panicking about tariffs and worried and nervous and all that stuff, I just said, do you not remember 2020? Do you not remember the last time that we had this kind of a panic, but it was a real reason to panic? We literally shut down the world. So my point is this. The stock market operates as an indication of what's coming. I've said this over and over again on the show. I said it at Investor Day. I said it to you if you came to our dinner in Houston. And I said the stock market is a discounting metric. It's a discounting mechanism. What does that mean? It means it's already pricing in the future. If we think something bad is going to happen 3 months from now, 6 months from now, a year from now, it's going to get priced in today. And then when the recovery happens, it also is true that the stock market is going to price the recovery in before you read about it in the newspaper. So what I would guess, I don't know, I don't really have a crystal ball. We got the fake one from Amazon here. But what I would guess happens is that we do enter an economic recession at some point in the future. It could be as early as this year. It could be next year sometime. We could see some contraction, some pullback. And the stock market is going to be at a brand new record all-time high next time, probably close to 7,000 points. And you may ask yourself the question, how in the world would it be possible for the S&P to be at brand new record all-time highs when I'm reading this news about a recession coming, or that it's even here? And the answer is now the market's already pricing in an economic recovery, and that's why you just can't panic. You cannot trade this thing. If you don't believe me, just look at Michael Burry. Michael Burry was the famous hedge fund manager who was covered in The Big Short, the movie. You may have seen it. And Michael Burry correctly called the subprime crisis. He made a bunch of money, shorted the market, shorted subprime notes. And for the past 15, 16 years now, since the crisis, he's been calling for another doom and gloom 08, 09 style scenario. Well, guess what? He's been wrong basically every year. So if you put this in context, Michael Burry has been right once out of like 16 years. If we did that at Stenger Family Office, you would fire us if we were right once out of 16 years. If you were right once out of 16 times as a head coach of a football team, you would also be fired. Just ask the Bears. So the point is now Michael Burry is being forced to close down his hedge fund. He puts out this tweet a couple years ago. The only word that it says is sell. The market went up like 46 or 60, something like 50% or something since he put out that tweet. Now he's being forced to close his hedge fund down. He only has $155 million in assets left, which is basically nothing in the world of hedge funds or money management. He closes his hedge fund down, and the excuse he gives is that his perception of markets and market prices today are at odds, meaning he doesn't agree with where the market's at today. We're like, yeah, we know, Mike, you've been saying this for 16 years, and I'm sure he's a nice guy. I'm sure he's obviously a very smart guy. He's a medical doctor and all the rest of it. But why is it that he's been so wrong? Well, he's been disconnected from the reality that this recovery, this bull market, the one that we're still in, and I think we're still in the early innings of, is supported by real data, by actual numbers, by earnings. You cannot compare the market we're in today to the 1990s. You cannot compare the market we're in today to the Great Depression. This is a real economy. It doesn't mean that every stock is perfectly priced. That's never been true in any market in history. It doesn't mean that some stocks aren't in a bubble. Absolutely. I've told you the bubble names in the past. We won't recap them today, but there's certainly stocks that are drastically overvalued today. But for the broad S&P 500, for the value companies, for the dividend stocks, you have to be a little bit more patient. But I think a lot of them are actually underpriced on where things are going. Now, let's look at S&P 500 here. Even after today's correction, this is a little bit lag data. I put this together this morning, but we're still up 15.5% year to date. We're up 107% since 2020. If you can believe it, we are up 645% since 2010. How is it that people are still worried, panicked, nervous about the markets? The market is incredibly resilient. It's bounced back despite all odds. It's made it through probably 3 or 4 major black swan corrections, and yet it's been resilient. How in the world is that possible? So I just remember, and I think back, and we named the show this week after Big Mouth Billy Bass, who you may remember. My parents have one of these in their basement. And remember what Big Mouth Billy Bass says? He says, don't worry, be happy. Some people just can't be happy. I think that's the reality. As I reflect on it and I think about it, some people just can't take Billy Bass's advice and be happy. They just don't want to be. They always want to be in a state of panic. They always want to be in a state of nervousness. Look at some of these headlines. Investors cling to crash protection despite sizzling U.S. stock market rally. Big short investor Michael Burry deregisters his hedge fund. We just talked about this, saying he's moving on to much bigger and better things. Well, hopefully those better things are not losing your investors tons and tons of money like he has been for 16 years. A renowned market bear who called the dot-com bubble warned stocks could be due for a 1987-style pullback. Look at these headlines. Absolutely atrocious. And if you don't actually read the articles and you just read the headlines, think about how damaging this would be. You've heard this guy before. This is the Rich Dad, Poor Dad author. He's been predicting a stock market crash for like 15 years. He's told you to put everything into gold and silver. He's predicted probably 17 of the last 2 recessions. Here's what I think it comes down to. I found this article from Mayo Clinic, and they have this whole article on doom scrolling. Stop the scroll, protect your mental health. This is where I think a lot of people are at today. They just have so much information at their fingertips. They might just be bored. They might be addicted to their phones. But we know how the media operates. The media's business model today is not really built on subscription like it used to be. Yes, many people still subscribe to the Wall Street Journal, the New York Times. But 90% of the news we get is not subscription-based. It's quick hits, quick headlines. It's eyeballs-based. And the media knows that. They know that if you see something scary, you're more likely to click on it. They're never going to publish a story, 160 million Americans made it to work safely today. Never going to be a story they publish. They're never going to publish a story about how Stenger Family Office thinks everything's just fine and the market's going to keep going up like it always has, like it has for the past 200 years. Not an interesting story. What are they going to publish? They're going to publish that Jamie Dimon says there's an economic hurricane coming, that Morgan Stanley says they see a big drop in the market about to happen. That's always been true. This has been the common denominator of how the news media operates. So just be careful. Understand where you're at, and understand, too, like we covered at Investor Day, that companies are based on the reality of earnings. The economic recovery that we've seen since 08 and 09 is not a fugazi. It's not a woozy-wazi. It's not based on a fantasy. It's based on actual results. And I would argue today the companies that we're seeing are just absolutely incredible. Again, not everyone's perfect, but the companies we're seeing right now are solving bigger problems than we've ever solved. It's absolutely astounding. You cannot predict the future with great certainty. Everybody who's been a futurist, who's tried to predict the future, fails miserably. In fact, the most boring companies of all time were utility stocks. For the longest time, we would buy utility stocks for our older clients so they get more dividends. And now utility stocks are getting bid up like they're tech companies. One of the first times ever. Who could have predicted that? I think another thing that you're going to see is a lot of the value rotation is going to come back. You're going to see sectors, you're going to see parts of the market you never expected to do well, eventually do well. So what's the answer for investors? The answer for investors is to follow the meritocracy of a cap-weighted market like the S&P 500. That's why the S&P continues to do so well, because it's a meritocracy, meaning the bigger and better companies get, the higher their earnings go up, the more of market share in the S&P they have. And that's why we focus on the biggest and best top 50 in most cases, top 60 companies in the S&P 500. Why? Because those are the best of the best of the best. And it's not to say that you should have everything in one stock or two stocks. You need to have diversification. You need to have guardrails and parameters. At Stenger Family Office, we do have guardrails and parameters in the plan so that we are protecting you when markets do get volatile, that we don't have everything in one sector, everything in one stock. Of course not. You have to have risk management. But at the end of the day, think about what's happening behind the scenes. It's absolutely astounding. The other doom and gloom feedback I get is, Nick, with all the AI going on, with all the machine learning, with this revolution in AI, what is going to happen with people's jobs? Aren't you worried about people's jobs? And I just think back, I'm on the board of Naper Settlement here in Naperville. It's a historical society, a museum. And we have a little blacksmith shop there, so you can come in with a school tour, your family, and you can watch the old school days a blacksmith put together a horseshoe or make some sort of metal object. And you think about the blacksmiths, and you say, well, with the introduction of the car, what's going to happen to all these blacksmiths? They're going to be put out of work. Well, if you went back to the blacksmith's days, and you told people this, you said, in 100 years, there's going to be a job out there called a cybersecurity analyst, they would have laughed at you. In fact, they might have locked you up. They might have said you're absolutely out of your mind. They would have never believed you. But today we literally have jobs that didn't exist 10 years ago, didn't exist 50 years ago, 100, 200 years ago. That's how the economy works. We've been through 4 industrial revolutions now. We're in the middle of the 4th industrial revolution in this country. Every single one of them, on the other side, we end up with better outcomes for workers, for companies, for the stock market, for the economy. And global poverty just keeps going down like this. Global hunger keeps going down like this. Why is that? Ask yourself the question, after all this technology, all these innovations, how is it possible that we have more unfilled jobs than we've ever had? How is it possible that we have better outcomes for the globe on average than we've ever had? How is it that baby boomers are the richest generation in U.S. history? Well, it's because each one of these technological waves brings better outcomes. This one's no different. You are going to look back 5 years from now, I believe 10 years from now, and you're going to say things are better today than they were. And you may not believe me. Again, the future is scary. It's uncertain. It's easy to look out in the distance and be nervous about the future. I understand that. We all feel that same fear. When the market goes down 5, 10, 15%, we all get a little bit worried. There's no question about it. But the reality has been that over time, the U.S. economy continues to win. It's resilient. That's why we call our flagship presentation Resilient America. It's why every entrepreneur anywhere wants to be right here on our soil. It's why innovation happens the most right here in the U.S., and you're actually seeing it between the states now. In fact, companies are leaving negative states and they're going to states that are more positive for business, better for regulation. Texas is absolutely booming right now. Why is that? Because entrepreneurs chase positive environments. They chase rule of law, personal property rights, lower taxes, lower regulation. And I know the U.S. isn't perfect. I know we've got our problems. We've had our problems in the past. We're going to have problems in the future. But we are certainly the last and best hope. It's the best place if you're going to start a business. And that's what drives the economy over time. It's not government. It's not central planning. It's not just capital. It's ideas. And that's what we need more of. We need to incentivize. And I believe after this current pullback, even if we have a 5% correction, a 10% correction, you could even see a 15% correction. Do not panic. Remember, I'm telling you today, do not panic. Buy more when you see that correction happen. Thanks for being on episode 206. We'll see you next episode, 207. And don't forget to subscribe before you go.